This is a macro-loaded week, the kind that reshapes directional buys for the next 4 to 6 weeks. This week, we're navigating 5 overlapping catalysts, the first one being Federal Reserve on July 30th on Wednesday. Later that day in Asian session, we have Bank of Japan policy. Thursday, we have core PCE inflation coming out, and then Friday is the non-farm NFP day, along with the EU-US tariff deadline, which is now resolved and we'll dive deeper into. Starting off with the labor market, because on Tuesday we start off with the first red folder of the week, which is JOLTS job openings, looking at the past economic data points related to employment and also the FOMC statements and FOMC member speeches, and looking at the overall employment and the labor market landscape in the US, we see that the labor market is cooling down, but it's not collapsing. The job creation remains tilted towards non-manufacturing sectors like health, education, and government. A soft NFP this week below the 150K mark and an uptick in unemployment will directly move into that validation of Powell's dovish tone. And also we will see the USD downside because of that. But if we get a hot NFP above 150, then we'll see delayed cuts, restored USD support, and that will reset the entire yield curve upwards again. So when we're looking at employment data for this week, we're not trading the actual data release. We're going to trade the market's reaction to the deviation of actual versus the previous and the forecast. On Wednesday, which is what the market's preparing for the most, is going to be the US interest rates. The market is fully pricing a hold with these interest rates at that 4.5%, but majority of the attention is going to be towards the press conference and Powell's tone. Powell is currently under political heat, but is expected to stay neutral, citing inflation uncertainty and trade stabilization, which we are going to get more conversations around the US and Japan trade deal and also a mention of the US and EU trade deal that just happened. Any hint of a Q4 cut can reprice yields, reverse the DXY, and boost risk assets. So we're not looking at the dot plot anymore. Instead, we're going to watch the real-time bond yield and the DXY reaction to Powell's press conference for the institutional cues and bias. Later that day, we have Bank of Japan's interest rates coming out. Bank of Japan is also expected to hold, but a fall hike window may be floated post this US-Japan trade deal. Stocks surged in Japan, but the yen remained weak after the US and Japan's trade deal news was announced. So this signaled a potential reversal on any sort of hawkish surprise from the Bank of Japan. The global risk tone from EU and US trade deal could also offset any hawkish JPY sentiment, which we will see when the market opens up, pricing in the news that just came out. JPY here is the pressure valve, so we're going to watch the USD JPY and GJ as first movers, and then we're going to trade the dislocation and fade back to the structure. On Thursday, we have core PCE price index coming out. The market is expecting a 0.3 to 0.4% hike of a month to month, reflecting the early signs of this tariff pass-through. This is going to be the early stages of what the Fed was talking about in their last press conference, where they're expecting that the inflation related to tariff will pass over from the producers over to the consumer side. Businesses have made it clear that they're not passing over the entire inflation over to the consumers, but only a certain percentage of that, and core PCE price index will be the first indication of what kind of hikes we are expecting, especially when it comes to CPI in the following months too. So the Fed here needs to see sustained rollover before cutting any sort of interest rates, and any sticky prints here could delay that action. Consumers are showing early weakness, but the Fed won't act unless inflation also cooperates with that. So this is not about the number. PCE release is going to be about the timing impact. Sticky inflation will lead into delayed interest rate cuts. So instead of maybe September, we might even see December, which will move the market into more of a defensive market sentiment. If we see a soft print, then we're on that risk on path, and we're going to see a lot more push in the riskier assets and equities. When it comes to Friday with the EU-US trade deal, we already have a deal confirmed as of right now. The US and European Union have struck a major deal ahead of that August 1st tariff deadline, averting what could have been a global trade escalation. So now the EU will face a 15% uniform tariff, exactly how the US and Japan trade deal happened, on most exports, including automobiles, but pharmaceuticals and metals are excluded. In exchange, the EU has agreed to purchase $750 billion worth of US energy invest $600 billion in US industries, increase military equipment orders, and open EU markets to zero tariff access for US goods. So now the market is starting to move into a risk on bias, which is exactly what we'll see when the market opens up, where there is no 30 to 50% tariff shock, which is what the market was trying to prepare for because of Trump's letter to the EU in the last couple of weeks. The Eurozone will also avoid any sort of retaliatory cycle because we also had news how the EU was preparing any countermeasures if there is no deal by Friday. Now that has stabilized the overall Eurozone sentiment and the euro currency as well. Trump declares that this is going to be the biggest deal, or is the biggest deal, trade deal that has happened so far, which is providing that political volatility to fade out. This removes a major overhang on USD pairs and equities for this week. And so now the markets are going to be focusing more on the Fed, the PCE, and NFP with less flight to safety in play. The sentiment has now shifted in favor of the euro, equities, and gold if the Fed continues to confirm easing the tilt and potential rate cuts coming into September as well. Now, the markets are priced for cooperation, not conflict, and we're going to see movement and more volatility as soon as the market opens up. Now, moving over to the technical side, we're going to start off with US 30 first. Let's take a look at the monthly time frame. We are currently rejecting into those all-time highs, and the expectation is that we might even break past that this week, given the optimism that we have from the trade deals, and that all-time high currently sitting at that 45,000 mark. Drop down to the weekly, and we have that support formation right here at 44,100. What I am also going to do is mark that clear resistance right here on the weekly time frame that we broke past last week, which is 44,500. So as long as we're above that, we're looking for those continued buy opportunities to the upside. And then let's drop down to the daily. On the daily time frame, between that 44,100, 44,500, we also see that daily consolidation, which we finally broke through on Wednesday. And then after that, we had very little volume, a bullish volume to the upside to even break past or test into that 45,000 mark flat. Very high chance that we might be able to do that this week, given the optimism, but the eyes will be on Powell's tone along with NFP data and core PCE. So those are going to be very important catalysts in the market this week. Drop down to the 4-hour time frame. If we're going to look for any buy opportunities, what I do want to see is price pushing up higher than that 45,000 mark. That is all-time high level. That price is going to be breaking past. So there's really nothing to refer to the left. So what we're going to do, the strategy is start with that 1-to-1, increase that to 2-to-1, 3-to-1, 4-to-1, and just let your trades run with the structure being respected of higher highs and higher lows. We do have high impact news coming out. So whenever the news does release, we are still going to be trading the reaction to that. So if we start to see more of a risk off sentiment to come back and respect that 45,000 level as a new support, we will be able to trade that as well. But we're going to follow the intraday structure and see how that plays into the higher time frame structure, which is still quite bullish here. If we're looking for any sells, then I would want price to break below these hourly support areas right around here. So all of that hourly support, that resistance, and then give price enough room to wick around, consolidate, do all that stuff in between here. And then we have those sells to come back down into this previous bottom wick rejection liquidity grab of 44, almost 644, 600 area. Come back and target this, and even 44,500. When the market opens up, I do expect a lot more optimism to be flowing in initially. We have GBP USD next. The monthly resistance at 1.374. The monthly just tapped into the previous monthly low, didn't really break past it significantly here, so we're going to mark that off as 1.337. And then come on to the weekly time frame. On the weekly, we start to see how price is kind of ranging into this area here. We broke above this 337 level here in May, and then after that we consolidated out for a couple of weeks. We got that push in June to come back and tap into that 1.374 area, rejected that the following week, and then came right back down, and this is kind of where we're hanging around at. Another level that I'm going to mark off, which we can adjust when we drop down to lower time frames, is going to be this consolidation resistance here. So 1.358. Come onto the daily, that is also that daily consolidation resistance, that resistance here, most recent one as well, and then price pushing back down. For any continued buy opportunities, what we want to see is price holding onto a support in general here, or even tapping into this 1.337 and then pushing back up bullish as it did previously twice. Those are going to be our buying opportunities to the upside while still respecting this bullish structure since the beginning of 2025. If price breaks below that, then we are going to be testing this bullish structure for potential longer term sell opportunity. So I'm expecting price to tap into this and then push back up, or even just hold on to a support here and then push back up. If it breaks any lower than that, then are we potentially coming back down into a liquidity grab of closer to 1.33 or 1.32 area? Anything like that would be completely fine. That's simply a liquidity grab here. But if price continues to break below this, then we know that the pound is going to be weak against the dollar, and the dollar in general is going to be gaining more strength. So we look for that continued sell opportunity to the downside. All of these are pretty good scalps turned into day trades, even potential swing trade opportunities. For a longer term swing trade opportunity, we definitely want to see the structure being respected, or fundamentals that would be supporting a lot more of the dollar strength against the pound, which is going to help with that sell off to the downside. There's a very high chance that at the very bare minimum, we can come back and tap into this if there is a weak pound against the dollar. If not, I'm expecting this week for price to just keep pushing and looking for more long opportunities on GBP USD, especially with the EU US trade deal. You come onto the 4-hour time frame and we're holding onto a support here. So as long as price can continue breaking these highs, we're looking for buys to come back up to the upside. Come onto the monthly on Euro USD. And then we have that 1.179 resistance. I'm going to mark off the support here instead of the bottom wick rejection because that's kind of the area that we're hanging in right now. And then if price can continue breaking below this 1.164, then we're looking for continued sells to come back and fill that wick and potentially even lower. Right now, the trade deal did happen, so I am looking for more of an optimistic move here as well. As you can see, based off of the weekly time frame, we're still in this bullish structure to the upside based off of the 2025 momentum to the upside. And then we came up and we rejected into that 1.179. Anytime price has tapped into it, there's always some sort of fundamental catalyst that helps move this pair. Right now, we already got that fundamental catalyst, which is the EU-US trade deal. Dropped down to the daily time frame. Price was holding onto a resistance here. And then on Friday, it gapped down a bit, closed almost like a bullish doji, so not enough confirmation or direction. If we're looking for any sell opportunities here, we're looking for price to break its own daily low, push back down into that 1.164, or even come closer to that 1.16 area. For any buying opportunities, we want price to break its own daily high and continue to the upside. You drop down to the 4-hour time frame. Price has established a support here. Seems like a liquidity grab. So as long as price can continue breaking out of this consolidation based off the 4-hour time frame, we have those clean buy opportunities to the upside and potentially even breaking past that 1.179. All of that comes down to how the market is going to be pricing in the news that just came out, along with the fundamental catalyst and the economic data that we're going to have for the remainder of the week. We have GBP JPY next. I'm only dropping down to the 4-hour and the 1-hour time frames just to show you the bigger picture for the remainder of the week, but you should be able to use this information and translate that to the lower time frames, 30-minute, 15-minute, 5-minute, whatever time frame that you take your entries on. This is just to give you a picture of the overall week. With GJ, we have a 200 mark. And then I'm going to mark off this resistance right here. If price breaks below that, then we can come back down for the wick fill. 196.9. Based off the weekly time frame, we have been in this insanely bullish momentum since September, or since April, and then continue up to the upside into that 200 level, kind of rejecting into that. And then last week we closed bearish down here, but still respecting these previous resistance areas. So right at that inflection point, if we're looking for any sells here, then we're looking for price to break below this and then continue back down. For any buying opportunities, we want price to establish a support here and then continue pushing back up bullish. When you drop down to the daily time frame, we see a clear consolidation formation here. So for any longer term buy opportunities, we need 199.1 to be broken and then continue back up to the upside. For any continued sells, we need this support here to be broken and then push back down. Come onto the 4-hour time frame, and it seems like we're kind of just hanging around here. So if you're looking for a scalp opportunity within this daily and weekly consolidation, you want to drop down to the 1 hour time frame and lower time frames depending on wherever you're taking your entry, wait for an established support, and the price will break these highs and continue back up to the upside. I would not be looking for an entry between 198.2 or 198.4. I know it may seem like a big enough range, but that's because of that consolidation, so I don't want to be stuck in that. I'd rather wait for price to clear out of this and then look for my trading opportunities to the upside or below this if I'm looking for sells. USDJPY. We have a support formation on the monthly down here at 143. And then we have a top wick rejection at 149.1. On the weekly time frame, we also have all this consolidation right here that finally price has broken past 146.2. And then last week we closed bearish down here with weak volume, but still rejecting right into this area, potentially even grabbing liquidity. And then come on to the daily time frame, and we see that confirmation because of that volume to the upside after price has respected 146.2 as a new support. So as long as price can continue pushing its own daily high right here and then continue to the upside, we have those buying opportunities. We're still maintaining some sort of a bullish structure right here, but this is a very important level that price has tapped into. Another level where pretty much where anytime price taps into it, there needs to be some sort of fundamental analysis or fundamental catalyst that needs to push price past this area. Coming onto the hourly time frame, we start to see price rejecting right into that 147.8, push back down, kind of holding onto a support here. So for any sell opportunities, we need this support right here to be broken, which I would just call 500. 147.5. So then you can clear out of all this consolidation. You have your sells to the downside, come back and target around 147 or even 146.8. For any buying opportunities, you wait for that established support, wait for these highs to be broken, and then you have your buys to the upside. Finally, we have gold. On gold, you can see with the last couple of months, it's been quite weak monthly volume with the candle closures, but when you drop down to the lower time frames, that means you're going to see a lot more consolidation formation. And here we have that top wick rejection at 3439.2. Then we have support right here at 3304.9. Drop down to the weekly, and this is where you start to see that consolidation, hence the weak candle body closures on the monthly. What I'm going to do is adjust this level a little bit higher to sit right on top of this resistance level here, and also the previous weekly's bottom wick rejection, which is 3327.4. If price can continue breaking below that, which it might given the optimism, then we're headed back down into 3270.3. You come onto the daily time frame, and we see that price keeps rejecting into these all-time highs over and over again, comes back into this area of consolidation, and then holding on to a support. Anytime price taps into it, whenever price breaks out of it, we see some pretty good volume, so that's what I'm expecting to see here as well. Based off the 4 hour time frame, we established some sort of a bullish candle closure and then some sort of a support. So if price is going to look for sell, or if price is going to drop, then we're looking for selling opportunities below 3327.4 and then a continuation down. If we're looking for any buying opportunities, we want to see the 4 hour highs here being broken and then continue to the upside. For the safest bet, I'm going to wait for price to break out of this area above this at 3348.4 and then continue to the upside. That gives me cleaner buy opportunity to the upside, and then that way I can clear out of all this consolidation here as well. That's pretty much it for this week. And like I said, on the fundamental side, this is not the week to trade forecast. This is the week to track the flows, anticipate the pivot, and position after the confirmation. And this is basically where we're going to wait for the event alignment, use the market sentiment analysis to read the tone, and then execute based off the reaction, not the prediction. If Powell holds firm and PCE is soft and NFP weakens, then we go on offense on Friday. Until then, discipline is going to be our alpha, and risk management is going to be extremely important here. I hope you guys have a great rest of the week, and make sure you guys are trading safe.